finally, Manglam is joining in with the cues from the FNO space. Hey, Manglam, good morning.
Good morning. So, if you take a look at the way the markets behaved on Friday, we did see that towards the second half, we did see a fair amount of coming off from the highs. In fact, it was led by the Nifty, which was down almost 163 points, led lower by the IT stocks as well. The IT index was down by almost 400 odd points. The mid-cap index, despite the Nifty doing well and the frontline indices doing well, ended marginally in the red. And the SGX Nifty now is indicating that the start could be further lower. So that was, something, a bit of a US sell-off was anticipated in the second half of our trade, and that came by, and which is why we're seeing a gap down of almost 135 odd points. The FIIs, despite a good market, continued to be sellers in the cash market. Over 1,000 crores worth selling is what they did. But on Friday's trading session, if you just take a look at the way the markets moved higher, there was an element of short covering. So yes, that was confirmed by data. Almost 18,500 short contracts were covered by the FIIs because of their heavy net short position. Remember, on October 13, they were 81% net short, and now those shorts have come down to around 77%, but they're still heavily net short. What really stood out on Friday is that despite the market moving higher and closing off highs, we saw more calls being written than puts, and that's telling you that at higher levels there is still a fair amount of congestion, and we have faced a fair amount of fear of heights. Were the markets to break out, FIIs are choosing to play it via options rather than play it via futures, because options is a more risk averse strategy. And the risk reward is better if you buy calls as against just buying futures itself. 17,350 call was extremely active. So almost 25 lakh shares being written, as was the 17,500 call. At the lower level, the 17,200 put was active as well. Why is 17,350 important? Because on Friday, the market turned around from that 17,350 mark itself and also broke below the 20-day moving average. So on the way up, these two levels would be resistances, and on the way down, the 200-day moving average once again comes into picture. Let's see whether that supports once again or not.